Good morning, everybody. Welcome back to the Schwab YouTube coaching channel for our Wednesday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from a lovely Denver, Colorado. Today, pleased to be joined by my friend, fellow Schwab coach, Mr. Brent Moritz. Good morning, Brent. How are you?
Doing good, Kevin. Always good to be on with you. Always look forward to Wednesdays for this reason.
Yeah, me too. Love getting a Wednesday discussion. We've had a little bit of a bumpy week to kick things off. We brought tariffs back to the headlines, of course. We've seen a number of X posts and the like, and a lot of discussion on tariffs, and it's kind of held the market at bay. But I don't know about you. I've been kind of encouraged by the resiliency we've noticed this week.
Yeah, we'll see that when we look at the charts here, because there's some things that could have spooked the market, and the market. If this is a pullback, that's not a bad pullback as far as pullbacks go.
I agree with you, sir. Hey, everybody, say hi to Cameron May there in chat. He'll manage things for us, answering questions and comments that Brent and I are unable to get to. But of course, we'll keep an eye on what pops up there in the chat. We want to hear from you. Please feel free to post for the duration of our show. We'll go about 45 minutes in total. Let's hit those disclosures for you, everybody, and then we'll get into the charts with you. Remember that our discussion here is exclusively informational and educational. Simply put, we do not make recommendations nor endorsements for a specific approach to trading the market here. We try to provide you with ideas and concepts traders may choose to employ. A lot of that comes from the technical analysis aspect, but please remember that while we do discuss technical analysis here, we encourage you to base your decisions off a multitude of factors, not to base your trade decisions exclusively off technical analysis. Now, if you are new to our segment here, we run through a top-down approach to reviewing the market. So we're going to look at charts of the major indices, notably the S&P 500, the NASDAQ 100, the Russell 2000. We'll look at the semiconductor index as well. Do have some equity sector review available for us today. I'm going to bring a composite chart to the table and kind of highlight the way that performance has been on a year-to-date basis in those 11 sectors of the U.S. markets. And then we're going to get to a bunch of stocks in the news today. We have a number of stocks with some upgrades, a few downgrades as well. So we try to get to as many of those for you here as we can today. Remember, if you're not already subscribed, everybody, make sure you're subscribed to the YouTube coaching channel here. That'll absolutely lend us a hand, but also makes it available for you on a day-to-day basis, of course. And there's a lot of content here available for you on the channel. So make sure you're subscribed. All right, Brent, let's hit up that S&P 500. We'll start there. Hey, we remain over 61 and in fact 6,200. It wasn't that long ago we were talking about the need to push through 6,100, and not only have we done it, Brent, but we've maintained the breakout to this point.
Yeah, I mean, in terms of barriers, it seems like there's not much that's stopping the market. If you look back over the past, I don't know, like 3-4 months here, what we see is just a series of flags that have come up, and it's just kind of repeating the process. The market goes up, has a little consolidation, up, consolidation, and so on. This looks no different than what we've seen before. If anything, it's been a smaller pullback. Now, I don't know where the market's going from here, but certainly not much. The market is not really showing any sign of worry right now from where we're at right now.
Yeah, exactly. And it's been given an opportunity, Brent. I mean, like I said, off the jump here this morning, we know that headlines have been leading us towards tariff conversations. We heard from the administration this week a desire to maintain the levels that they had previously set. They noted Japan and South Korea on Monday. And yet what I'm looking at is 2 red candles in a row, and they didn't break any trend in this case.
The market has certainly, over the past few months, expressed some concern about all the tariff talk. It seems like at this point, it's been kind of factored in. And so no matter what's coming out, it's not really spooking the market at this point. And so, we've had, the market didn't love it, but it's just, yesterday we were basically break even, just maybe down a smidge. And the day before was a little bit of a pullback, but given the context of prior to that, like 5 or 6 days in a row up, it seems like not bad.
Brent, we are looking at 53 consecutive closes over the 20-day now. I've been saying for about 2 weeks it's getting a little lengthy and a little long in the tooth.
Yeah.
Yet this is an excellent reminder of how trends can work, everybody. You can maintain even a short-term trend a lot longer than you may expect. And Brent, I think another topic here that is pertinent and needs to be utilized and reminded to our viewers is that, narrative and feeling about the market is not necessarily the best approach is to trading the market, because if you've been feeling uncomfortable, you'd be forgiven for feeling uncomfortable, Brent. But if you're a trend trader, the fact is you've not been given many reasons to be a seller of the S&P rally or the NASDAQ rally or even the semiconductor rally we've participated in. A lot of these moves have been very standardized, very stable, and as long as you're following a trend line you're familiar with, comfortable with, chances are you've stayed with things. If you bought back on April 23rd, waiting for a close below the 20-day again, you haven't had a reason to sell out. And most recently, Brent, that's actually shifted. When we broke out here, check this out, everybody. I'm going to change this just to a single 10-day simple moving average. And you can see we recaptured it right here on June 23rd, and now we've been above that for 2 full weeks. So the speedier moving averages can even be employed here, Brent, and I think it's just a good reminder to not fight what is happening.
Yes, and so it's not as you mentioned, it's important to not confuse what you feel with what the market is going to do. And even if you're using some sort of more objective valuation type measure, and a lot of them, if you look at them, will show a market's getting kind of pricey, frothy, whatever term you want to use.
Sure.
Valuation measures aren't short-term market indicators. It's a completely different thing. Maybe long term, maybe that, but for forecasting short-term or valuation indicators are of virtually no value in that regard, as far as I can tell.
Yeah, it's really true. It's funny. In the instances where the market is pushing higher, those valuations tend to go through the roof, especially on your companies that have either not generated a profit previously, but they look like companies that you'd want to invest in for the next 5 or 10 years. Then they get frothy in the short term, and now their valuations are skewed. And yet you can watch those valuations get even more skewed and more egregious before the pullback actually happens. It's an excellent reminder, Brent. You don't really want to rely on valuations to determine short-term price action. That's just not likely to be the driving factor. Eventually, valuations will come back to a point of note, and traders and investors alike will witness pullbacks in those very overvalued positions. That'll occur, but that happens on more of a cyclical basis, doesn't it, Brent? It doesn't happen tied necessarily to the stock itself or in the group you're watching.
Absolutely. And if we want to extend that concept to individual stocks and not market valuations as a whole, when we talk about fundamental analysis, that's one reason when we talk about fundamental analysis as maybe more applicable or pertinent to longer term moves in a stock. But in the shorter term, that's why a lot of technicians are very skeptical of fundamental analysis, because you can find stocks with not great fundamentals and the stock's doing well, or vice versa. And there just seems to be a disconnect there. So and believe me, often at the beginning of these webcasts, we say technical analysis is not the sole means of investment research. And I'm not saying that fundamentals are worthless or valuation measures are worthless. What I'm saying is for shorter term, the technicals, there's just a disconnect between fundamentals and valuation and the shorter term trading activity of a stock.
Yeah. And it's a good reminder, Brent, that we need to trade based on the things that make sense to us. Yeah. If you're a trader who's trend trading, valuations probably take a very low priority in how you view your positions and view the market. You can absolutely witness that frequently. We've got many, many stocks trading at excessive valuations, and yet trends remain strong.
Yep.
Like I like to point out, just don't fight against what you're seeing in the trends here. Brent, there's been so much consistency between notably the S&P 500 and the NASDAQ, but also the semiconductors. Everything that we talk about on these charts of the S&P can largely be applied to what's going on in the NDX here. April 23, we recapture the 20-day. We've been above it since 53 consecutive days, et cetera, et cetera. Broke to new highs. Support lays beneath us, coincident with a 20-day moving average. I feel like a broken record, Brent, but my only reason of bringing it up is to ask you, I want your opinion on this, if you don't mind, at least to the point that we can offer one. Is this consistency amongst the major indices a positive for the market, generally speaking?
I would say that it is to an extent. This shows that the market rally that we've seen has been driven by some of those more cyclical type sectors, such as like IT or communications or things like that. And you could probably throw industrials in there. Now, that can be taken to an extreme, too far. We do want participation from sectors that maybe aren't as represented in the NASDAQ. But in terms of what over the past few years has really been the market driver, when the market has performed well overall, it's been driven by some of these bigger sectors that are more represented in the NASDAQ. And so I don't think it's a bad thing, but all good things can be taken to excess, I guess.
That's true. I'm going to point this out, Brent. Today's action in the NDX is cleared the highs of the last 2 days. So this looks like a continuation move from a short-term candlestick viewpoint here. Very brief 2-day pullback, gap test, and back up. I mean, what are you going to say about the trend other than that remains very sound here? Now, that 22,200 level, coincident with the 20-day moving average, does appear to be a zone of short-term support. I could surely imagine a handful or more traders, short-term traders, watching that and maybe lightening up their NDX positions on such a pullback if that were to occur. But we appear to be a bit away from that happening here, as we apparently are going to try and push to new highs today on the NDX. I mean, try not to fight against what we're seeing, as we've said, but a lot of consistency here between the S&P and the NDX. Okay, Brent, let's check out those small caps. We've had an impressive move in small caps lately. Most notably, though, it was the 3-day finish to last week that was really grand here. Tuesday, Wednesday, Thursday, pushing to new highs in the short run before taking this quick breather. And again, Brent, a very quick breather here over 2 days and right back on trend, it would seem.
Yeah, I mean, lately, small caps have actually kind of mirrored some of the large caps in that regard. In fact, they've had some outperformance. Now, they're starting from a deficit. They had been beaten up more than large caps, and so it's probably good in that regard to see more participation in that regard on this. But of late, you know, so small caps have underperformed, but of late, there seems to be. They're holding up pretty well. And so a lot of kind of, you know, we can't talk about all-time highs. Maybe we haven't been above the 20 quite as long, but we've been above the 20 for quite a while now. So charts looking pretty similar. Again, if you look at that RSI on all these, we briefly hit above that 70 level and just dipped down a little bit, but that's just showing this, but no concerns there. We have that high. We're actually moving up a little bit today. That is just showing we've had a pretty strong market here.
Really has been. And the reminder I like to bring is that, Brent, when small caps are providing any semblance of rally or leadership, and granted, it's lagging, so we know that we've been lagging both the S&P and the NDX pretty effectively here with the small caps. But the fact is, we've broken a downtrend. And that downtrend has now been held that broken downtrend, broken for quite a while now. We're looking basically the last 6 weeks of a broken downtrend now. and a new short-term uptrend working against that 20-day moving average. I think the only instance where we closed below it may have been this day, and I'm not even convinced that that was a close below it. We opened below it and rallied, but it looks like we finished pretty close to the 20-day. So again, a lot of consistency, a lot of strength here in the short run. We'll see if that maintains. Support here is rather notable, everybody, at the confluence of the 20 and the 200 right here. Anytime we get confluence of data, time frame, especially from moving averages, a very short-term moving average like the 20-day and a nice long-term moving average like the 200-day, that tells us that traders in two very wide and disparate time frames are going to be watching that zone for support. So holding that level especially on a throwback and test, if that were to occur, would be very, very important and would tell us quite a bit about those traders who would like to step in if that were to play out. Now, we don't expect necessarily a throwback, but anytime you get a breakout, you got to think that that's on the table for a potential test of support.
Yeah, you can throw in a horizontal support level as well, and that's just the general principle with support and resistance is, when we try to determine support and resistance levels, there's always the question of how strong is it? Because look, you can find support or resistance anywhere on the chart. Just, there's enough lines you could draw or whatever. But really, you need to ask yourself, is it meaningful support or resistance? How strong is it? The more touches you get from moving averages, different moving averages, diagonal trend lines or horizontal lines or Fibonacci's or whatever, the more things that are telling you, and the more bounces off a particular level, that is probably going to lend some strength to that support level.
Absolutely true. Brent, let's check out what's going on in those semis. We've talked a bit about this over the last few weeks. The strength here has been remarkable because we needed to push through my band of resistance, and we have done just that. We are now seeing this group trading at a near one-year high, Brent. Now, that's not all-time levels, but we appear to have filled this big gap from back in July of last year now.
Yes. Yep, absolutely, Kevin. The SOX semiconductors lagged for a while, and that's something that hurt the market quite a bit. And this is when we were talking about the leadership from the NASDAQ. It's not all the same. The SOX is one of those leaders in the NASDAQ, and the NASDAQ tends to lead the overall market. So, of late at least, and so. A way to say that is the SOX has been a market leader. Now, the SOX went up really strong. There's been the narrative of, these more advanced chips that are, and the question was, did we get kind of over, what is it, head above skis or whatever, head over skis on that in terms of the SOX. And so it certainly had a pullback for a while. Lately, we've regained that strength, and around 59.30, we have some potential resistance ahead, but that's only if it continues to go up. But we still see that same kind of flagging pattern that we've seen in these others. If you look back since the beginning of April, up consolidation, and just repeat the process. And so I don't see any changes in that right now.
Yeah. I don't know how many other ways we can say it, man. You just try not to let your emotions take you out of the trends until they actually break. We witnessed these little falling wedges into the 20-day moving average, proper pullback there over a quick 2-week window, consolidation sideways over a 2-week window before breaking out. Quick 2-day, 3-day pullback to the horizontal breakout, and then broken out higher to the upside. If you just kept it simple, Brent, this has been, whether it's the semis, the NASDAQ, the Russell, a lot of these processes in the last 3+ months have been pretty simple to manage if you didn't allow your emotions to lead your process thinking, huh?
Yeah, no doubt. And it's something Carol pointed out in the chat. The VIX is, the VIX has been coming down. The VIX is now below 16. And so that's just reflecting the strength of the market. Just a reminder to those who are not familiar with the VIX is just a measure of basically options pricing or uncertainty in the market. And the higher it is, the more uncertainty there is, or more comfort there is, I guess. Maybe I just said that wrong. The higher it is, the less comfort, the more uncertainty and fear in the market. The lower it is, the more people are feeling a little bit better in the market. And for a while, we brought up tariffs before and uncertainty, economic uncertainty. That was kind of wearing on the markets, and you can see it reflected in higher VIX levels. Well, 15, 16, that's not a high level anymore. For a while, it was kind of sticking. It was persisting closer to that 20 level. It can be lower. We've seen lower. But right now, given it seems like the market performance has helped people feel better about themselves and their financial situation when the market is doing better. And therefore, you see the VIX lowering for that standpoint, I think, to some extent. Yeah.
I also think, Brent, when we talk the VIX, we should also make note of the fact that we're going to get spikes in the VIX around known windows of time. We are not in the midst of earnings just yet. We'll get going again next week. We're going to be hearing from the big banks, FedEx, of course. We know that FedEx can kind of give us a little bit of a heads up about the health of the economy based on packaging moving across the country. But as a reminder, generally speaking, the institutions generally don't position themselves with put options unless they're around known events. FOMC meeting and potential risk there, or Liberation Day, potential risk there. That kind of stuff leads to more commonly spikes in the VIX. Now, the risk we could run into in the short run is a little bit of complacency risk, meaning that a basic shock to the system, whether that be a single tweet or a bad piece of data, can absolutely impact the market and can come from out of the blue, seemingly, Brent. So we always have to be aware of that, don't we?
Absolutely. And one of the biggest things you always have to remember in terms of risk in the market, the biggest risks are the ones that you don't see. The VIX can only reflect known risks in a certain sense. But think about risks in the past and whether you foresaw them. Did you foresee the financial crisis in 2007, everyone?
Yeah.
No. Did you foresee coronavirus, COVID in 2020? No. The biggest risks that we have, not just in the market, but in life, are things you don't even see coming. And so just because the VIX is low, by no means does that mean there's no risk in the market or less risk in the market. The risk is there. It's just the market's not really foreseeing it right now.
I think that's the takeaway, Brent. And the reminder that the institutional traders utilizing VIX options are just not doing so right now, and that tells us quite a bit about their comfort in maintaining longs and not protecting profits that they are likely sitting on. Because a lot of that probably got bought up in late April or mid to late April, I would imagine, as we recaptured the 20-day moving average. I would venture to guess that was when we saw a bunch of institutions deploying money. So, Brent, we've had a little bit of an interesting combo going on in the chat, the last half a dozen posts or so, talking about the discrepancy between maybe price action and storylines and news and price action, et cetera. What I'm going to do is shift over quickly here to looking at the Market Watch returns over the indices. I'm going to go to the quotes page specifically and just look at the return detail here. But I wanted to speak to this, Brent, because I feel like, the idea that we shouldn't be watching news to trade, I think, is a absolute mistake. I believe heavily in relying on news to help you understand trends and shifting opportunities. But Brent, when we start thinking about the combination of news as it impacts the market and whatnot, each day definitely feels a little bit different. And, James led with, hey, what was the news that gave us this rally this morning? Brent, I don't have any news that gave us this rally today. I don't have anything that you could hang your hat on and say, well, clearly the market should be going up. But rather, it is a comfort that the market has had now for 2 months plus that the trend that's working is going to continue to work, and that lack of fear, it is leading to a certain extent, I think, to traders forcing themselves to be comfortable putting money to work at these upper levels.
Yeah, I think that's a good point, Kevin. The news is a lot of times market movement. We we attribute it to a particular news event when in reality it may not be related to the news event. You know, sometimes I'll look at a financial news network or something like that, or a news channel or something like that, and the headline will say, you know, the Dow is up on such and such news. And of course, the market then reverses itself, and then the Dow is in negative territory, you know, a half an hour later or whatever. And they've either, you know, changed their headline or whatever. I think people want explanations for the market as to why the market is doing something, but a lot of times there are no clear explanations. We want certainty in life. We want we want to know, and sometimes the answer is we don't know. One other point on news I'd like to make, and that is it's challenging trading the news because by the time the news comes out, this is the same thing with news on individual stocks and market news. By the time the news comes out and you can react, the market has probably already reacted. So it's hard to get ahead of that. Now, that can translate and say, well, market news is good and the market is trending up. And then we can say, well, hey, we're riding that trend. But actually just trying to trade any individual news event becomes very difficult because the market is a very quick acting beast out there, and it's hard to get ahead of it.
It is. And commonly we see that there's somebody that knew about that news headline before you did. Somebody always seems to know in advance. There seems to be leaks available all the time. Somebody else is going to be, you know, profiting on that, but not necessarily us. And so the reminder is, as I like to think about it, at least relative to technical analysis, every bit of that news that you know is known to the entirety of the market, of course, and that's going to have an impact on price action. So I think that has a lot to do with our understanding of the price action and the recognition that, remember, if you know something about a stock that's happening, so does the rest of the market, and that's already built into price. Brent, the topic that I wanted to address here as it relates to the return detail is looking at the year-to-date breakdown of the sector performance. We see industrials leading, we see tech number 2, communications number 3. But that doesn't necessarily, it speaks to the strength of these groups on a year-to-date basis, but it doesn't necessarily speak to leadership on a year-to-date basis, Brent. And I thought we could pull up Rachel's chart here briefly and talk about this. I'm sure some of you might like to see this grid yourselves. I'll be happy to share it with you. But Brent, this is just a reflection of the 11 U.S. domestic sectors and the returns that they have had relative to the S&P 500. And these patterns don't look nearly as strong. And I think the reminder is that you can get leadership from these individual spaces, even though you're not necessarily getting excellent returns. Clearly, we can see that tech has been leading S&P, as has communications. And then industrials has made a brief pullback, but up into the spring, late spring, we were seeing industrials really leading the charge here. What are your thoughts about when you take a look at something like this breakdown of the opportunity of the sector relationships to the S&P 500?
First of all, this is a great chart, Kevin. So I'm going to take you up on the offer that you had to share this chart here, this grid, because I like this and I don't have anything like this currently. But let me mention this. At different times, money goes from one, if it's not in one sector, typically it's in another. And the thing is with relative performance, or relative strength, excuse me, it doesn't necessarily relative strength. Sorry, I lost my train of thought here for one sec. Relative strength doesn't necessarily mean the market is going up or this sector is even going up. It's just maybe going up more than other parts of the market there. So It's like you can be the best in a bad overall bad pack, and you're going to look good, but overall maybe you're not doing that great. But let me also mention this. All these sectors aren't all created equal in the sense that some sectors are much bigger sectors. These are S&P 500 sectors. Some sectors are much bigger sectors than others, bigger percentages of the market. And we've seen this in the past when we've looked at like a heat map, and we've seen how big IT is and how big communication is, and how big versus how big utilities is, or something like that. Because IT is a much bigger part of the S&P 500 than utilities. And so it's the market as a whole will probably do better if IT is doing well than if real estate is doing well or something like that.
Yeah, I think that's a fair reminder. Obviously, I think those of us who have been trading the market, investing in the market quite a while, know that when we get leadership from utilities and real estate, it's likely not the best of our markets. Probably a difficult market we're dealing with if we are getting that kind of leadership. So the likelihood is a positive takeaway from the fact that we're getting leadership from tech and from communications and certainly from industrials. So I wanted to bring that one up. I thought that was a good review of sector analysis this morning, at least, and always an opportunity to share a new grid with you all. And our friend Rachel does such a fantastic job when she joins. She always brings me something new, and I love bringing that to the table for all of you. So everybody, let's take a look at a bunch of stocks in the news this morning. We've got some upgrades. Brent, why don't we start us off? Let me see here. I think the big one I think everybody's probably curious about is Microsoft. Oppenheimer upgraded Microsoft to outperform from perform, set a target at $600 a share. So that represents about a 20% lift premium to where we are right now, Brent. So fantastic opportunity. As you can see, if I clear out my draw set here, we're going to see a lot of consistency in the Microsoft trend here. Got the 20-day, let me guess, was it April 23rd? Let me see. 20-day, a day late, 24th. No, it was the 23rd. Excuse me. Okay. 23rd, it caught its 20-day, and we've been above it since. Could have done something similar on this one, couldn't you?
Yeah, and Microsoft is one of those, this is like a $3 trillion company or something. So this is one that certainly affects the market quite a bit, but trend is strong, 20-day. Look at that RSI at the bottom of the page.
Yeah.
We have just, sometimes we hear, well, it's an overbought territory. It's going to go down now or something. No, when the market is trending strong, these can just stay. It's just reflecting the strength of what we've had, and the fact that it's not often you see stocks that stay above their RSI 70 for that long a period of time. So that's just showing how strong that is.
It's a great reminder, right? I mean, I talk from time to time about the way a trader might employ the RSI, and that being when you're over the 70 line and then you see the security come back below the 70 line. Some traders will utilize that as a potential reason for selling off some of the position or recognizing you might go sideways. I think what we're learning is that, Brent, even a violation of the RSI 70 line isn't sufficient reason to be taking profits. It probably needs to be coupled with a break of the 20-day moving average. And then you could say, oh, okay, now I got two pieces of data perhaps that might encourage a trader to take some profits. Oh, we broke the 20-day and the RSI is under 70. If that occurs, I think that might lead a trader to take some action. But we just haven't had a whole lot of sell reasons here in Microsoft for about 3 months almost. And it's just a wonderful reminder, Brent, not to overthink things sometimes.
Yep. Trend is your friend.
That's the truth. So there's one infotech position with an upgrade. How about an industrial with an upgrade, Brent? Caterpillar upgraded at Melius Research today to buy from hold. New target, $500 a share. That's a 25% premium from where we are. Firm upgraded the shares after increasing the 2027 estimates to reflect an expected data center driven capacity increase in engines specifically. Caterpillar's role in the power explosion surrounding AI build out is bigger than Melius had thought a few months ago, and that's led to this upgrade, Brent. So when you look at this one, there's a lot to parse here once more, but ultimately a deep V sell-off that has just been rallied back strongly.
Yeah, I was thinking as you were talking on this, that V is kind of just what the market did, at least what some of the bigger stocks in the market did, is it had a strong sell-off. I mean, if you were to look, the high 418 down to April, we were down at what, about 270 or something. I don't know what percentage drop that is. It's not a full 50% drop, but that's a big drop. But since then, we've basically made up almost all of it, and we have put 35% drop there from February,
just from
beginning of the year. That was like just a couple month run there. Huge drop. We've made almost all that up, and there's no end in sight right now. And of course, that can bend. Maybe today's the high day, but the trend is not giving us any indication of weakness at this point.
Not at this point. Still remaining in overbought conditions. 20-day moving average too slow. 10-day moving average probably catches up the lows in here. I think I've got one of those study sets that incorporates the 10 with every. I guess I don't have it with it. Oh, there's a 10, a 20, and a 50. There you go. Heck, you could even use the 10 all the way back to the test here on June 2, Brent, and Cat would have been holding it. So, very quick bull flag that got resolved with today's gap move. So more of the same, it would seem, at least now, based on the trend movement we've had here. All right. I got to say, there's been, again, conversation in the chat's been really, really great today, everybody. Some good points about the way that traders might be going about things. And one of them that I saw that really just caught my eye, I think it was Nora mentioning, here it is, once traders learn to scan, not to scan through the whole market to find their ideas and just lean into the stocks that they are comfortable trading and know they will find themselves to be a bit more consistent. I thought that was a really cogent viewpoint, Brent. As a trader, we tend to think that we got to trade every single opportunity, and we can really get bogged down by those opportunities. There's a lot of securities in the market right now, for example, showing similar trends to the one in Caterpillar. Traders can feel compelled to trade everything in front of them, Brent, but that's not necessarily the right approach.
That is absolutely not necessarily the right approach. Experts aren't experts in everything. They focus. The traders I know tend to have a few things or strategies or approaches to the market that they focus on, and because there's no, if it's working, there's no reason to go outside of that. So I would totally agree with that, and that's true. I'm not going to get into options trading today, other than to say that for options traders, sometimes there's a lot of potential different approaches to the market that people use, strategies, but most traders don't use all of them. And similarly, all these different strategies, or even a lot of them. A lot of traders will just use one or two. Same thing with the market. When you're looking at the stock market and trying to pick out individual stocks, most traders aren't looking at the whole of the market each time and trying to master it all. Find your niche.
Yeah. Find a niche. Absolutely. Trade what's working. Don't fight against it. You don't need to trade every single group in the market. Pick a handful of stocks that seem to make sense to you. Chances are it's because you're on the same wavelength with the traders that are trading those stocks. And that's, of course, what creates price trends is the traders that trade those stocks. So I think that can be helpful to keep that in mind. As was requested here, are we seeing a little bit of resistance on CAT here? Potentially fitness and dance. Yeah, we got a little resistance at 410, an area where we might see a pause, but I wouldn't consider resistance to mean an incapability of going higher. That much I would say. Further, I need to point out that while we're talking about upgrades and price targets, remember, analyst price targets are never a guarantee to be achieved. Both of the Microsoft and Caterpillar targets are 20 and 25% respectively above current price action. By no means are those locks to be achieved, but that just tells you a little bit about expectations from the fundamental standpoint, according to these analysts. So I thought those were all pretty helpful. One more, Brent, on the upgrade side, I thought was interesting is Sunrun, which kind of caught me off guard because, the solar stocks have had a rough go of things. And whoops, that's not the right one. I meant to do that. Excuse me. And Run has been in a bit of a downtrend for a bit here. We've made a series of even lower lows, lower highs, pardon me. But they got upgraded at Jefferies to hold. Previous at underperform. Now they price target at 11, but again, anytime you find a stock that's been really struggling and you get upgrade notes, I think it's important to just kind of make note of it. There's not a lot on this chart, though, that stands out from a real bullish standpoint at this time, does it?
No, I mean, I guess the best you could say is at least the trend that we had is broken, the downward trend, at least, if you look from the beginning of September down to April, it was going down strong. We've seemed to have picked up support here. Not really much of an uptrend at this point, but so that's a good thing for it. It's a challenge. This is kind of a tough chart from a technical standpoint. I think it's not super bullish. But things change here, and kudos to this isn't a comment on the accuracy of whether they should upgrade or not, but Kevin, you and I often talk about how you only see upgrades after a big run up. We have had a pretty substantial run up, but from its lows percentage wise. But you certainly see a lot worse on that, and so who knows? Maybe something to take a look at.
Certainly a 100% push off of this low here from just June 17th. So 3 weeks made 100% from 538 up to 1120 at its high just on Monday, that is. So if anybody bought that up and took profits on a 100% move, props to you. Wonderful trade.
Yeah, that's the thing with these real low price stocks. I mean,
they can move.
It's percentage. That's why, by the way, sometimes a lot of traders will say they'll have a rule, and the rule is something to the effect of, and I'm generalizing it, but I'm not going to trade stocks that are under $10. Doesn't mean stocks that are under $10 can't go up a long ways. They're just typically smaller companies that have more volatility. Volatility can help you out. If you bought at 550 or something like that, it's great, the percentage move, but it's also, it can move against you very quickly as well. And a lot of people try and slow it down a little bit in that regard, which is one reason. There's probably other reasons, but one reason why lower price stocks are sometimes avoided by some traders.
Should point out, as is asked here by Jim, something other than the chart that drove the upgrade. Yes, there was. The commentary from Jefferies is all tied to the one big, beautiful bill being signed, being favorable to the company, as it turns out. The firm admits they had made a downgrade of Sunrun just a month prior, but with the signing of the bill, they feel like they got it wrong, and they are reversing course, and that's the reason for their shift here. All right, let me see here. Taking a quick look, Brent, we're got a minute or two remaining. There was
a question earlier.
Go ahead,
Kevin. It was way back in the chat, and it was from Carol, I think. She said, "Why is copper going up on the announcement of tariffs?"
Yeah.
Let me just address that real quick. Just one way to remember is think of supply and demand, and the increase of a tariff effectively is limiting the supply of the commodity, at least for a cheaper price of that commodity. So essentially you're restricting it, and that's what's driving up the price there of copper. Now, interestingly, it doesn't mean that copper companies like FCX or RIO are necessarily jumping up the same. I noticed that as well. I mean, the FCX has had a nice run, but not a huge jump the last last day or so. And so, it's not all, not really necessarily, these are copper miners, not necessarily going up on the news yet. So I don't know. I don't know if I can explain that, but that's why copper itself is going up.
Yeah, I certainly can't explain it, but the price action doesn't look fantastic on something like Rio here.
Yeah.
You got a lot of lower lows and lower highs. So certainly in the midst of a bit of a downtrend. The last thing I was just going to point out today, everybody, is that I know we didn't get to all I mentioned there were a slew of upgrades and downgrades. I've got about 15 plus on the total between the two. And I just wanted to point out, everybody, you can absolutely come in here and look for your lovers and losers. You can utilize the watch lists available to you here in Thinkorswim for analyst downgrades, analyst upgrades, even the pre and post market movers. So if you feel like we didn't touch on everything and you want to see what else is out there, this might be a good way to check that out, everybody, with the analyst upgrades and downgrades. And of course, notice the target here, which lets you know that's a dynamic watch list. Every time you get something new added, it's going to be added to that list automatically. You won't need to do anything. Brent, really good discussion today, man. I feel like we covered a lot of bases as usual. Love having you on a Wednesday. Always good to reconvene. Thanks for being here.
Thank you. Thanks for having me on, Kevin. And we'll see you same time next week.
That's right. Everybody, thanks for being here. Big thanks to Cameron there in the chat. And speaking of, a wonderful chat discussion today, everybody. Really good back and forth from all of you. Glad we could bring those comments and points into our discussion here today. So thanks for being with us. Make sure you're following us on X. Hit that thumbs up down below if you like today's discussion. That'll help us out on the replay when we get this approved and into the archive for all of you. And follow us on X. Cameron May CS, Kevin Horner CS, Brent Moore CS. We would appreciate it. Hope you all have a great rest of your Wednesday, everybody. Look forward to seeing you again real soon.